Very happy with the purchase, very happy with the results. I'm not going to go through the quarter because I don't think that's relevant. I think what's relevant is we know very clearly there is a secular structural supply-demand imbalance. It's not going away. And the only way that imbalance has been met these past 6 months is with drawdowns from inventories, both commercial and strategic petroleum reserves. Guess what? That simply can't continue. So there's going to be upward pressure on energy prices continuing. By the way, this is the rub against my bullish. This is the one rub against my bullish call overall, is that energy is a problem.
All right, turn our attention to Chevron, also beating estimates, posting record profit and lifting buyback guidance. Jason, you own it. This stock today actually on pace for its best day since all the way back in November of 2020.
Yeah, obviously Chevron's been a juggernaut this year. It's up 38%, up 10%, as you mentioned today, Frank. Nice beat on the top and the bottom line, return of capital of over 26%. They've reduced their debt below 15%, and also the guide on the buyback, close to $15 billion. I mean, raise that guide. So, you know, Chevron's been a nice one. And as Jimmy mentioned, I mean, the supply-demand imbalance story, that narrative is not changing anytime soon. And obviously Chevron's going to benefit.
Brent, you got some energy names in your portfolio as well. What's your take on what we're seeing today?
Yeah, I mean, I'm not surprised. You're going to continue to see the rest of the year energy as a sector, I think, be the bright spot from an earnings perspective. And I think you'll continue to see those earnings of the group move higher. I definitely think, though, that the Sauron eyes of the White House will be looking at these record profits again, because I think that, once again, as Jim and Jason pointed out, we have a supply-demand imbalance. Therefore, that's going to keep inflationary pressures higher. So I just think that this is not a surprise, going to continue to be this imbalance. But I do say that those huge profits are going to be, I think, an issue for the White House, and Elizabeth Warren, I'm sure, will come out in the next week or so and tweet about it.
All right, Jim, I know you have something you want to tag on here, but really quick, Rob Sechan, earlier you said you were bullish on energy. What's your take on the earnings that we're seeing?
Earnings have been positive. We're very selective in energy. We're sticking with the best in class. EOG's one of our main holdings. CNQ's another one of our main holdings. We would say EOG is the elite in the exploration and production business. They're essentially the Apple of E&Ps, so they fall very much within our quality screens. They have incredible proprietary technology. They're the most efficient capital allocator in the industry. They have low debt, generate tons of cash, and can even generate tons of cash if the price of oil falls to the 80s. So, you know, you have bullish fundamentals around energy, and with EOG selling off so much, I think that from the highs, I think it's a great stock to own.
Jim?
Frank, real quick, you know, any experienced investor like we all are worries when we're all on one side of the trade. I mean, that's just what's going on here. So Bryn did point out one risk, which is the political risk. It's real, by the way. The other risk to the trade, to the investment, is if somehow Russia and Ukraine not only get to a ceasefire, but there's regime change in Russia. I don't see that happening anytime soon. Absent regime change, and by the way, regime change to a more friendly regime, you're just not going to get Russian barrels coming back to the West. So, you know, if that's the risk, I'm perfectly comfortable with all of us being on this side of the trade.